Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, October the 21st. The year's 2021. Let's talk trading. High-low analysis, part 4. As always, these videos for educational purposes only. Your results may differ from mine. So what else is there to talk about when we talk about high-low? Well, actually, there's a lot. So for example here, we've got the monthly chart. We're looking at the pound. And you can see at the moment, this month is an inside bar. So we're within the range of the previous months. Now, high-low, that is. Now, if you've been following me for a while, you know one of my methods is the rat zone. And you know another one of my methods is the holo and the 1, 2, 3. And those are based on something that I read from Reardon, who says that, you know, every day price makes a high and price makes a low. And after making the high and the low, price retraces off of those levels. And when you think about it, it makes sense, but it's something that you can exploit. So, for example, this month, price tried to make a new low, but failed and turned around. And so you could see this as a lower wick zone trade, trading out of the wick zone back into the candle body here. You could see it as a rat reversal. You could see it as a lowest monthly open trade right there. There's a lot of different ways, you know, or methods, but it's still based off of a simple fact that price makes a high, price makes a low, and price retraces. Now, you can see here, price made a low, price failed to make a lower low, price broke through, made a lower low. And so you can see this pattern. And once again, once you see a pattern, you can exploit it. Does it work every time? No, it doesn't. But it will work one time. And if you catch it that one time, the time it works, then you can put some pips in your pocket or points in your pocket or pennies in your pocket, depending on what instrument you're trading. And the thing about this phenomenon is it doesn't matter which time frame you're trading. And you can see here we still have one pair that hasn't filled for the week. So this week, price broke through the high, made a new high, but it's retraced off that high by 23 pips at the moment. And we can see it once again on the opening range for the week. We put in a high-low for the week, and that day happened to be an inside bar. We broke through it on Tuesday, dipped back in and went out yesterday, Wednesday. We're well above it today, Thursday. But you can see right here, price made a high of 332, made a high of 34 barely, but this time only made a high of 329, failed to make a new high, came out of the wick zone, coming out of the rat zone. Once again, the same thing happens. Just so you know, we're 168 pips, now 169 above the yearly open. And we've already seen the inside bar action. Today's range is only 47, but you see there are some pairs over 100. So we've got a very compressed range today, which usually means the next day something big could happen. But today we still have, about 8 hours, almost 7.5 hours left in the trading day. So a lot could still happen. Even down to the hour, you can see the same thing happen. Price made a new low, reversed, came back down, made a new low, reversed, came back down, made a new low, reversed, failed to make a new low, made a new low, reversed, failed to make a new low, reversed. So you can see a lot of this either making a new low, failing to make a new low, but then price reverses. So once again, to be exploited. And you can see the same thing happen this hour. Push down, failed to make a new low, and reversed. And you can see it here in the rat zone. Right here, the green rat level. Smart rat versus the original rat. Same thing here. And you can see how the smart rat, these retraces at the end of the day seem to be getting smaller. I'm not sure if that means anything, but that's just something that I'm observing happening statistically. Pivot point, and we hit the pivot just to be, and we haven't taken out the weekly pivot this week, and we've taken out daily pivots. Once again, showing in and out of that rat zone. This is something here. I call this a return bar, and this one here is a return bar because they're such big candles. And you can see we just barely missed the open here and came back up off of it. Using the 3-level ZZ, once again, just to let people know, especially if you're new to the indicator, it is a breakout indicator, not a reversal indicator. So when you see that 3 ball appear, it means price is breaking out. And that's why I've even updated the dynamic support resistance indicator to show the pushes and the breakout. And one of the things I need to do is I need to put all the blues together and put all the reds together. Be easier to read, I think. And once again, knowing how many after a certain number of pushes and after a certain breakout, then you start to look for a reversal. And there's one thing in this indicator I got to figure out the formula, because what happens is it goes and it looks for horizontal, but you can see here this number is going to change to what this breakout really is in terms of pips. Let's just let this candle close. And you can see we actually have a 7 pip breakout from this level to this level. But you see it jump back down to 2.8 because it made a new high. So I have to work on the formula that I use, because it starts out thinking horizontal and then coming back. When horizontal is when all this level is the same and it's still not breaking out. So this is something that you want to wait for it to be on the 1-minute chart. You wait for about at least 12, preferably about 15 pip breakout before you start looking for that reversal. And so we're using the highest low and the lowest high as trigger points. Once again, the simple price action screen with the Walmart lines and the previous hours high-low in this particular case. And you can see here, we failed to break out of the low. We just broke out of the high. Now we've just come back inside. And with using the price near indicator, it tells you, depending on how many bars you want to look at, if you're near highs, lows, opens, closes, pivots for the time frames that you specify. Once again, looking at the wick zone here, along with the rat zone. And just looking at my dashboard to look at the different methods. So we've got the 1, 2, 3 indication here. We've got the holo, we've got the rat, we've got the wick, and we've got the ATR zone. So this is the ATR saying you don't want to look for a reversal until price gets into the ATR zone. But that's just one method. But today, like you said, we have a very compressed range. Don't look for it to get to the ATR zone unless there's an explosion of some kind. And then back to the crisscrossing. As you can see here, we haven't broken out of this high and we haven't broken out of this low. So we're ranging at the moment. So whether we break out this hour or maybe the next or the one after that, but price is ranging. So it will break out eventually. We just don't know which way. And, once again, with the fractal radar indicator set to high low, we can see how many bars over the last 60 had highs or lows. So for the current price, how many highs were above it at these different levels and how many lows. So you can see with all these numbers showing up that there's been a lot of ranging in this area. So you can see it on the chart or you can see it on the fractal radar. And then you get back into looking at the range. So far, we had 24 pips this hour, but the average over the last 24 hours 14.9. So we've already extended that range. We've passed the average. So looking here, high minus low, with that 23.7 pip of range to be exact, this one rounds it. And we're at the 88th percentile. Close minus open, we're at the 83. So this has definitely been a lot of price action, a lot of movement this hour. You see we broke out at a previous high by 3.2, but we missed the previous low by 0.8. So as you're sitting at your chart and you're, looking at these highs and the lows, just keep in mind that you can use these to be profitable. But of course, always have your stop loss in place because it's not going to work each and every time. But, just keep practicing with it, keep observing, and see if you can make it work for you. Because, fellow traders, just remember when you sit down at your trading platform, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, please hit subscribe and please click like. And if you see me over on Reddit, throw me some karma, would appreciate it. This is TheRumpledOne, over and out.